Hey everybody, I want to take a look at Tesla, and I think you guys know how I feel about this from a fundamental perspective, but I just want to look at it from a technical perspective and put on a credit spread trade based off of that. From a fundamental perspective, I think you guys know how I feel about this. It's a pretty cash flow poor company. Long term, I think it has potential. Short term, though, I don't like it from a fundamental perspective. But if you're just trading short term, you're likely just going to have to look at technicals. We do find that there is a demand zone down here, and I cannot deny the fact that we have major support at the bottom right here. Here's the thing though. In a situation that we had right here, we went from 338 all the way up to 270. Right here, we went from 353 up to 1026. So it's a very similar situation, and what happened right here is that we had a blow off top, and then it came down lower before retesting, and then it went lower. I think we could have a similar situation where it came up, it's going to come down, and I think it's just going to chop sideways before we see any other action, because even though it's an uptrend, and we can look at the 200-day moving average, 20-day moving average, and the 50-day moving average, and we can tell that it's clearly in an uptrend. It seems very overextended, and as soon as the RSI gets overbought, it pushes back down. So what's the trade going into this? I was looking at this, and from a fundamental perspective, I don't want to. And by the way, if you guys are interested in the fundamental perspective, a couple of months ago, I made a video on Tesla based on the fundamentals and talked about why I think, at least in the short term, it's a bit overvalued. And we did make a trade based off that, a longer term trade based off that. But in the short term, you have a strong uptrend that you don't want to fight. And so you don't want to fight this strong uptrend right here. Strong uptrend and strong base of support. So you don't want to fight that. At the same time, I don't like the fundamentals, and I think all the good news is priced into the larger market. So the S&P 500, the Dow, Nasdaq. I think all the good news is priced in, and all the bad news has not been priced in yet. So the pot odds to the upside don't look good, and it's starting to get overbought. So I think that I feel much more comfortable making a bearish bet, but at the same time, I don't want to straight up short this thing. I think it's just going to trade sideways, so shorting it wouldn't be profitable either. And also, I can't, I have to give the price action some respect and say that, yeah, it's in an uptrend, so I have to respect that fact right there, and that the trend is holding very strong, as it has in the past and as it does with lots of cult stocks. So I want to put on a credit spread trade where I'll clear this whole chart, remove drawings, and I want to put on a credit spread trade where I want to be short the 1300 calls, July 24th, 2020 expiration, and then long the 1400 calls, July 24th, 2020 expiration. So that would be up here. So with the spread up here, basically the price needs to stay below this range right here. And I'm pretty confident it will, because if it doesn't, it gets overbought very quickly. And we're in one of those situations, we're getting towards the top of that range where it came from down here in the 300s, came up here, blow off top, and then consolidated before it went lower. And I think that we're in a similar situation where I think we'll just see sideways choppiness, back and forth sideways, because it has gone from the 300s once again up, this time even higher into the thousands. So I think just selling credit spread would be nice. The main thing people are going to say though is that they're going to put up $10,000 worth of capital on a credit spread, only to receive a credit of probably around $300 right now, depending on when you put this on. But people are going to say that they're going to have to go out a whole month only to receive 3%. So on an annualized basis, that's only about 40%. Even if we just take simple, that's 36% right there. So people just don't feel that there's a risk reward, that you're risking 100 to make 3. But I would tell them, first off, the probability that it gets up here is so small because already overbought. So I think this is a high probability trade. And the market's telling us that this is a high probability trade. It has a 95% probability of working out in our favor. if the implied volatility mean reversion happens, because volatility is very high, especially upside volatility. The calls are really pricing in a lot of upside volatility. I don't think it's going to play out. And if it just trades sideways, then theta is going to play out in our favor. But remember, since these are so far out of the money, since this is all the way up at $1,300, these decay really quickly. So even though it's a month out in expiration, within a week, these should lose essentially just half of their value. And you can take them off and buy them back after that. And so that would be my advice to you right there. Put on that credit spread, and after choppy action after a week of choppy action, buy that credit spread back, and it's probably going to be worth half of what it is right now. These out of the money options all the way up here, these calls, they are decaying very quickly. I looked at some calls just a week ago. Many of those calls are worth just half of what they're worth right now. The calls, if you want to sell some naked calls up here, that wouldn't be a bad idea either, but I do expect that there's going to be some choppiness as the RSI starts to cool off, and as the broader market fundamentals start to come into play. But I think shorting credit spreads all the way up here is the way to go. Get some bearish exposure in there, but really, at the end of the day, when you're shorting credit spreads up here, it's not so much about the directional exposure. It's not so much about the implied volatility exposure. It is more so about just being a theta trader and making money from the passage of time. And I think these are going to decay very quickly. If you have any questions about this trade, just go ahead and ask me. Other than that, stay profitable and happy trading.